What does the future of retirement security look like in a changing economic landscape? Explore the key strategies and innovations guiding the way forward. Find out how evolving policies and technology impact your retirement planning. I'm Muhammad Hamdan and this is Money Matters. Hello there, good evening and welcome to your favorite channel, TV3, where you can also stream on Tonton. Today we have employees, Provident Fund EPF Chief Executive Officer Ahmad Zulqarnain Onn with me right here in the studio. Welcome to Money Matters, Zul.
Thank you, Mohammed.
Thanks for taking the time to be with us on this episode of Money Matters. Now, Zul, I can call you Zul,
yes,
right?
Of course.
Great. I want to ask you right off the bat, straight away, the question about the EPF's latest initiative that was launched in May this year, namely the restructuring of account to cater to the evolving needs of EPF members. How does the EPF view this initiative as a solution to addressing future old age poverty, and what kind of measures are being taken to ensure that members can really benefit from this initiative as it is intended to?
So thank you, Mohammed, and thank you again for inviting me onto Money Matters. It's an honor and privilege to be here.
Sure.
I think you've asked a very good question. So in May this year, we announced the restructuring of your EPF accounts from 2 accounts to 3 accounts. And what used to be account 1 and account 2 is now account Persaraan, account Sejahtera, and account Flexible. Account Flexible is the account where you can withdraw at any point in time today. What we have done as part of the restructuring is also change the ratio that goes into the accounts. So originally it was 70-30 into account 1 and account 2. And now it's 75, 15 and 10 into Persaraan, Sejahtera and Flexible. So in introducing Flexible
being the account 3.
Being account 3. So that's 10%. So
right.
In introducing account Flexible, we have actually also increased the contribution into account Persaraan. And account Persaraan is the important account when we look at how members prepare for retirement. So all our statistics regarding adequacy, for example, of savings when you do retire, is measured based on account 1, because that is the account that you cannot withdraw until age 55. So in increasing from 70 to 75, we've actually increased the level of adequacy for members in general. At the same time, introducing flexibility so that members to deal with short-term financial needs can then tap on their account Flexible or what people call account 3 today, which is the 10% that is going into the account, which we can withdraw at any point in time.
So it's like killing two birds with one stone.
Correct.
And at the same time does not disregard the fact, APF's core mandate to ensure that Malaysian workers have enough savings for their retirement.
Correct.
Now, speaking of preparing Malaysians for their retirement, how does the EPF evaluate the retirement preparedness of Malaysians? Aside from this account restructuring initiative, are there any steps taken by the EPF at the national level to ensure that Malaysians are on track to meet their retirement goals?
Yeah. So when we think about this question, I think the first thing I should mention is that Malaysia is fast becoming an aging society. We are already 7% age, and by 2043 we will be 14% aged. And by 2057, when Malaysia as a country turns 100, in 2057, we will be 21% aged. And that is a very high ratio of the aged in terms of percentage of population. So it is a demographic issue that we are facing, where the country is aging very quickly, and the country is aging very quickly for 2 reasons. One is that people are living longer, which is wonderful. So life expectancy keeps going up. The other reason is that couples are having less babies. And this is a phenomenon we see in many countries where today the the birth rate for Malaysians is at 1.6 babies per couple, as opposed to 2.1 that is required, what's called a replacement rate. So when you're below replacement rate, that means at some point you're not producing enough babies to replace the older generation. In the pension world, there are two measurements that matter to us. One is called coverage, one is called adequacy. Coverage means the percentage of population that is covered by a formal retirement scheme. Okay. So in Malaysia, just to give very high-level statistics, out of 100 people, only 60 people are covered by a formal retirement scheme. Of the 60, 50 are covered by EPF, roughly, and 10 are covered by civil service pension scheme. So 50 plus 10 is 60, and there's a balance 40 that's not covered by any retirement scheme.
Right. These are people from the informal sector.
Correct. Okay. So they are not covered by retirement schemes because generally they work in the informal sectors, or they are migrant workers, or they work on something called contract for service as opposed to contract of service. It's a technical term, but generally they are hired for short periods of time to do a specific job under a contract for service. Over time, we wish to increase the percentage of coverage in Malaysia through both voluntary means, but at some point through legislative means as well. And that's important because getting it up to 80-90% is where we should be as a country as opposed to at 60% today. The other ratio that we look at is adequacy. Adequacy is a measurement of what percentage of, for example, EPF members have sufficient savings to retire. And we have defined something called the basic savings rate, which is 240,000 ringgit. It's not a terribly high number, but even at 240,000 savings at the point that you are 55, only 1/3 of our active members have that level of savings at that point in time. So 2/3 basically don't have enough, right? So that's why it's important when we did the account restructuring to also increase the contribution to account 1. So as I mentioned earlier, in measuring basic savings, we look at account 1, not all of your savings in EPF, because account 2 and 3 you can withdraw, some with conditions, some without conditions. So we look at account 1. And account 1 today is 33%. We think that over time that will increase with the higher contribution, and we hope to be more like 60+%, say 10 years from now. So that, from EPF standpoint, that's what's important to us.
So now the EPF has been in the limelight, especially in the last 3 years or so, I would say, particularly because of COVID in the picture and whatnot. With discussions around Malaysia's pension reform gaining momentum, what role does the EPF see itself playing in shaping the future of retirement security for Malaysia, and how will it adapt to meet the evolving needs of the country's aging population, like you mentioned before?
Yeah. So it boils down to these two figures, coverage and adequacy. It is introducing reforms and changes to legislation, but also changes in terms of how we structure the defined contribution plan, that is the EPF, to allow for more and more Malaysians to participate in EPF. And that will include informal sector, that will include people on contract for service, that will include people who are self-employed, sole proprietors and the like. What we have done over the past few years is introduce voluntary means of contribution. So today you can voluntarily contribute to the EPF, no questions asked, up to 100,000 ringgit a year. And what we have also done is we have activated our branch networks and our staff in the branches to go out and outreach to their respective communities in educating and explaining what you can do with voluntary contributions to EPF and how important it is to start saving for your retirement. So retirement is a little bit like, is a tough subject to talk to people about because people generally have a bias towards the now as opposed to the future. So, and the younger you are, the more acute that is. And what we want people to do is just start a savings plan with us. Now, it can be with EPF, it can be any other provider, that's okay as well, as long as people have a savings plan monthly where they are contributing to their future.
Right. Zul, you spoke a little bit about the workers from the informal sectors. We want to talk about how to get these people to register with the EPF, but hold that thought because we're going to go for a quick break for now. So to our viewers, don't go away because Money Matters will be back shortly. Welcome back. Employees Provident Fund EPF Chief Executive Officer Ahmad Zulqarnain Onn is with us in the studio today. Zul, let's talk about workers in the informal sectors. The EPF seems to be actively encouraging more Malaysians to register and open an account with the EPF. How, if you could share with us the progress so far, considering that nearly 4 million Malaysian informal workers face greater old age poverty risk due to a lack of mandatory contribution?
Yeah. So this goes back to the 40% that I spoke about earlier in the program. We have a lot of outreach programs today. We're allowing for voluntary contributions. We run a lot of financial literacy programs. We have upgraded the app, the iAccount app, which you can download from the App Store or the Google Play Store. And it's very easy to open an account with the EPF today. You don't even have to come to a branch. So it's eKYC, sort of, which you will have the experience in many different apps.
Sorry, what's eKYC?
Take a picture of your IC, take a picture, take a selfie, and then your account will be opened.
Even the biometric process can be done online.
Correct. And today we are allowing for people as young as 14 years old to open an account with the EPF. So we do see parents starting to save for their children's retirement account as well, which is really interesting. And this has been growing as a portion of our portfolio. So today, roughly in terms of contribution, about 12% of the monthly contribution comes from voluntary channels as opposed to mandatory channels. It used to be 100%, and that 12% is growing year on year as well. So we're beginning to see traction of people voluntarily contributing to the EPF. There's two ways to voluntarily contribute. One is to use the facility of the 100,000, no questions asked. The other way is to talk to your employers, if you are in the formal sector, about increasing your monthly contribution. So by law, it is 11% today. we are increasingly seeing people telling their majikan that I want to contribute 12, I want to contribute 13%. So they are voluntarily contributing. And that is driven by awareness and literacy programs that we are running with various communities.
I was just actually about to ask you about how is EPF leveraging technology for this matter. If you can elaborate more the kind of digital initiatives that EPF is adopting to simplify things like contribution tracking, retirement forecasting, and financial decision making for its members.
Yeah. So we have 8 million active members today. We have 5 million monthly average users on the app, which is actually quite a respectable number. And we encourage and we run campaigns to encourage all of our members to download the app. And it's a very easy to use app, and you will be able to track the contributions quite easily. The reason that we ask people to do this is, of course, it is about self-empowering them, about knowledge of their own financial standing, but also making sure that the contributions which are submitted by their respective employers are coming in every month. And if there is a case where you see that your contributions are not coming in, it's been deducted from your salary, which you can see on your payslip, and it's not in the EPF account, we encourage them to contact us immediately. And we will do our investigations if there is a case of employers withholding contribution to the EPF, which is against the law. Right? It does happen. We do see about 2% of employers defaulting on contributions, and we have a process of investigation and enforcement with respect to these errant employers. So it's something that we take quite seriously, and that's why we encourage people to download the app so that they understand whether their rights have been fulfilled or not. The other thing is also making it easy for people to self-contribute. So we're building in features into the app to make it easy, such that in the future you can set and forget, what we call set and forget. So you set, okay, I will contribute 100 ringgit a month, 200 ringgit a month, I will set it, and at the beginning of every month, for example, it will just pull it from your salary account, right? So you don't have to worry about it. And in our experience, that is the best way to get people to save, because saving is actually quite unnatural to most people.
Absolutely.
And when you're busy, you tend to forget, or you're tempted with other things. So it is about setting it and forgetting about it, which is actually the best way.
It's not a priority for most people.
It's not a priority, but you just have to get people to do it that one time. And if they set it for that one time, then actually they stick to it. Generally, they stick to it. They don't reverse the decision anymore.
Now, with the EPF being one of the 6 GLICs pledging 120 billion ringgit for domestic direct investments, how does it plan to balance its commitment to boosting the local economy while at the same time ensuring sustainable returns for its members over the next 5 years, for example?
Yeah. So of that 120 billion, 50 of that is from the EPF. So slightly less than half of that.
That's a huge amount.
It's a huge amount. We today manage assets under management of 1.2 trillion ringgit. Where is that money coming from? It is essentially a reallocation from fixed income that is invested domestically into direct investments, into projects and companies domestically.
In what kind of sectors specifically?
So that's a good question. So out of the 50 billion, that is spread over 5 years. So for the EPF, it's about 10 billion a year. And 10 billion relative to a 1.2 trillion is a relatively small number and relatively manageable number for us. In terms of sectors, a chunk of that is going to go into infrastructure projects. So that could be renewable energy projects, data center projects, ports, airports, toll roads and the like. So typical infrastructure. A portion of that will go into businesses. And one of the sectors that we do like and we think has a strong tailwind surrounding growth over the next 10, 20 years really is healthcare.
Healthcare.
So as the population ages, healthcare demand is also going to increase commensurately. And healthcare also dovetails with our mission in providing a good retirement for Malaysians, right? So investing into healthcare will be one of the primary sectors for EPF as part of that 10 billion a year that we're looking at.
Now, speaking of healthcare, we want to explore further into healthcare and retirement costs. But again, hold that thought, because we're going to go for another round of a quick break. So don't go away, because Money Matters will be back shortly. Thanks for staying with us. Employees Provident Fund EPF Chief Executive Officer Ahmad Zulqarnain Onn is in the studio with us. Zul, under the Gear Up program, EPF will focus on healthcare, which is a critical aspect of retirement planning. With rising healthcare costs becoming a growing concern among Malaysians, how should Malaysians take these expenses into account when preparing for their retirement?
Yeah. So, this is a really important question. I do think that more and more Malaysians need to understand their future needs in terms of healthcare and understand the inflation that the healthcare sector, from a cost standpoint, is experiencing and will likely continue to experience. And then the answer to it, the very simple answer to it, is that Malaysians need to take care about buying takaful or insurance for themselves at an early age, as possible.
The penetration rate of takaful and insurance is still at a relatively
low,
unfavorable level.
So, and that's a topic that we're trying to tackle as well. So EPF has a program called iLindung, where you can, for example, go into our website and as an EPF member, you can buy takaful policies from a number of providers through our website and use your account, Sejahtera, to pay for it. Right? So it becomes a very easy way.
So you don't have to fork out extra money for that. It will come from your
EPF account. Okay. And we're looking at expanding this in the future as well. Currently, there are 5 takaful providers that provide policies on our website. But it's something that's really important. And the way to think about it is, so a lot of people think about insurance as a cost that if I don't have to incur, I will not incur, right? The reality is, as you age, you will need medical care. It's not an if, but it's a when.
It's a fact.
It's a fact. As you age, you will need medical care. And the right way to think about it is cheaper to prepay for medical care through the purchase of takaful or insurance policy rather than waiting it out and paying it for it later, right? And that's one way that you beat medical inflation, by prepaying it today and buying policies today. It is cheaper to buy the younger you are, but it's never too late to buy.
So let's talk about some of the steps that the EPF is taking to mitigate the potential risks associated with inflation, wage growth, and employment trends to ensure that members can achieve a secure and comfortable retirement.
Yeah. The answer to that is consistency, and consistency in savings for your retirement. And understanding that compounding is very, very powerful. And compounding is powerful the earlier that you invest and the longer that you invest.
And don't touch the money.
And don't touch the money. So as an example, we actually have a mismatch today between retirement age and the time when you can withdraw fully from EPF. The retirement age is 60, but from EPF you can actually withdraw everything at age 55. Right, so there's a 5-year gap between retirement age and when you can withdraw in EPF. If you do not withdraw just that 5 years, and most likely you'll still be working within that 5-year period, your money will go up by 40% in just that 5 years, right? And going up 40% means that as you retire, your income from your savings will also go up 40%. So it's like getting a 40% raise if you don't touch that money for 5 years. When you do hit retirement at 60, don't take all your money out at once. So some people do, and we do see a high proportion of people, when they do take out all their money at once, they tend to spend it very, very quickly. So a quarter of our members that take out money at once tend to spend it, all of it, within 3 to 5 years. And then you're 65 and you don't have savings anymore. The right way of doing that is to instruct EPF to do a monthly withdrawal. So you can set the amount, and we generally recommend about 4 to 5% of your savings to be withdrawn monthly, and then you treat that as your retirement income, right? And the general principle is that your retirement income should be about 60% of the income that you used to earn before you retire.
Perhaps last question before we wrap up the show. What specific advice would you offer to individuals at different stages of their career, early career, mid-career, and also late career, in terms of maximizing their EPF benefits and preparing for retirement ultimately?
Actually, it's the same advice to everyone, irrespective of age. The power of compounding is very, very powerful, and to get the ultimate benefit from compounding of returns over your career, it is to let the money work. Right? And letting the money work actually means not withdrawing it. So being able to delay gratification is really important. Being able to build up a culture of savings is really important. And we see that, and you can save with EPF, and you can save with others as well, right? And that either from a bank account or in unit trust, exchange traded funds, etc. But it's about regularly saving. The best are those that have EPF, don't touch the EPF, but also have additional savings through other means, through a unit trust or FD and the like, right? And not withdrawing that money and just allowing the returns to compound. Compounding is very powerful. So that's answer number one. Answer number two is something that we've touched on. Buy healthcare protection early. Buy healthcare takaful, healthcare insurance early. It is much cheaper when you're younger, and be consistent about that.
Which is also something that is being offered by the EPF.
Correct. And treat it not as a cost, but as a prepayment. Right? I know that's hard for especially young people to understand, but the reality is you will need healthcare. It's not an if, it's just a when. And it's better for you to prepare for that when early in life, and buy small policies to start off with. That's fine, right? As long as you have some protection, you're taking care of yourself. And I guess the one thing to think about is, one way to think about it is that, what is the biggest asset that you have? Right, so I ask people these questions. What is the biggest asset that you have? So people say, my car, my house, But actually, it's yourself, right? And your ability to earn income, right? That is the biggest asset that you have. So you have to keep yourself healthy, and health protection is a big part of that. Financial security is a big part of that as well.
That's wonderful. Now, we've come to the end of the program. Ahmad Zulqarnain Onn, Chief Executive Officer of EPF, thank you once again for taking the time to be with us on this episode of Money Matters. Really appreciate all the insights that you shared on this program.
Thank you for having me.
Thank you. Now, for the past half an hour, you've been with us here on Money Matters. If you missed the earlier part of these episodes, you can also catch it up on Tonton. I'm Muhammad Hamdan. Thanks for watching and have a great weekend.